Well, hey there. Welcome back. I'm Denyn Pysz. Another episode of the Car Dealership Show. I have been in the automotive industry for over 20 years. I've worked with franchise auto dealers, vendors, marketing teams, sales teams, service teams, and I've seen enough F&I offices to develop a mild eye twitch anytime I hear the phrase. So what kind of payment are we trying to stay around? I've seen how the car business really works. The good, the bad, the severely undercoated. So, if you're interested, you ever wondered what happens actually behind the scenes? Bienvenidos a mi show. Welcome to the show. So Dora. You'll get it. Episode 3, the F&I office, where the real games begin. I decided to call it Episode 3, the F&I office, where the real games begin. You hear that? Que pasito burrito. Monday morning. It's a long weekend. It should be real. This should be real, not non-alcoholic. But I also got a request to not drink beer during the episode because I tend to burp. But burping's part of life, right? You know who you are. I'll try to keep them down to the minimum, not let them come up. Like I've always said, better out than in. Hey, donkey. So this episode, I want to shift from it being Finance 101 to the secret psychology of the finance office. Consumers don't care about reserve, compliance, and penetration rates nearly as much as they care about, am I getting screwed? Do I need gap? Is the warranty worth it? Why is this guy trying so hard to sell me? What tricks are they trying to use on me? And how do I know that this is actually smart to do? Let me just touch on the reserve, compliance, and penetration just for a sec, because that could be a whole nother episode, and it's information you should know. But if you get too deep in the weeds about it, it can be very confusing. So reserve, simply put, as I mentioned before in another episode, is that the dealer has relationships with banks, lenders, and they have the ability to mark up the rate above what you're approved at. So the bank says, oh, Johnny Q over here can get a 6.99 on this program. The dealer has an ability to, it's already predetermined with that lender that they can mark it up a certain percentage, so up to 7.99. So they give you the deal at 7.99. They keep a percentage every time you make a payment. So there's an area, one of the many areas where they're able to make money. That's really how they kind of foster that relationship with the banks too, is that they, the bank incentivizes the lender incentivizes the dealer to use them, not with just things like that with the reserve, but with, other incentives and things that are going to make the dealer want to keep using that bank over and over. Compliance, so boring, but so necessary. The F&I manager spends a massive amount of their time making sure everything's compliant. That's why those offices are locked. That's why they're constantly having you fill out and sign 47 pages of documents. It's because they don't want to get sued, and they want to pass the risk from you and them onto someone else, like the insurance companies and things like that. So compliance is everything in the F&I office. It's super boring to talk about. The finance managers spend a lot of time staying educated and trained so they can explain it to you without it sounding like hieroglyphics. And then the last part that I'm not going to get too deep in the weeds about is the penetration rates. And what that means is that an F&I manager is financially obligated to sell you products, and they are rated and ranked and paid on penetration of products per deal. So there's a whole nother episode we could do on reinsurance, what that means at the dealership level and how much money that makes the owner, because it all trickles down into the finance office. And the finance manager, though they're paid really, really well, a lot of their pay is based on the products and how many products they're penetrating and how much they're selling them for you for, and so forth. So let's get into the things that most consumers are most concerned about. Those components that I mentioned: getting screwed, gap. Is it worth it? Is this guy trying to sell something hard? What tricks am I going to avoid? And is this actually going to be smart? So the magic of this episode, and it is going to be magical. So sit back and relax. Buckle your seatbelt. I know the puns are here, man. I have all the automotive puns written on this cue card by this guy. He's holding it up the whole time. Buckle your seatbelt. Stay in your lane. Let's put the pedal to the metal. Is that I want to be able to show or talk about how the sausage works. Wait, how the sausage works? That doesn't even make any sense. I want to show how the sausage is made and not how it works. Man, I just took a turn in this episode, didn't it? I want to talk about how the sausage is made. And I want to explain that many F&I products actually legitimately solve real world problems. Instead of making the F&I manager the villain, I want to make this episode where the consumers realize, holy crap, some of this stuff actually makes sense. And I'll be able to walk you through that and walk you through how the F&I manager explains these things to you. So the mind games of the F&I office is what I want to call this little section. And most customers walk into the finance office thinking they're entering a hostage negotiation, and the finance manager thinks they're going to sit and educate you. It's the truth of it's both. So I want to explain why F&I sells with stories. One thing customers don't understand is that F&I managers don't sell products. They sell outcomes. If your car breaks down, it will cost this much money. And the best F&I managers sell using stories. Why, do you ask? Well, because nobody wakes up thinking, I really hope someone sells me gap insurance. I really want gap insurance. People buy solutions, they don't buy problems. So I want to get into the maintenance plan presentation. And really good finance managers, they won't say, hi, would you like to buy a maintenance plan? They say, because everybody says no. Instead they'll say, how long do you plan on keeping the vehicle? And the customer will say, probably 6 or 7 years. And then they'll say, well, over the next 6 or 7 years, you're going to buy oil changes, you're going to rotate the tires, buy new tires, brakes, inspections, factory maintenance. Anyway, so then they'll show them the cost of the ownership of that vehicle. It's really easy to find. You can literally find it right now on your car, or right now on the car you're about to buy. Look it up on AAA or ChatGPT, whatever you want to do. Just plug in the year, make, and model, and then the mileage you're most likely going to drive every year, and just say, how much is the maintenance going to potentially cost on this vehicle for the next 3 to 5, 7 years, whatever. And they do the same thing with repair. And typically, this type of vehicle, outside of warranty, what kind of repair am I going to expect? So that number you're going to get, and the finance manager, a good one, is going to present that number to you, and they're going to explain to you, hey, you're going to have oil changes. Today's maintenance costs $90 for oil change, $150 just to get a service done in your vehicle. And then there's the burp. You're right, Mom. You're right. My bad. So, and then $400 for major services. Then they'll ask, do you think parts and labor will be cheaper in 6 years from now? And then everybody laughs. We all get a good chuckle. The kid's even laughing. And then they'll explain, you can either pay for those costs later at a higher price out of your pocket, which you're going to have. It's basically guaranteed. You're going to spend money on the vehicle. Or you can lock them in today and we can spread them out over the next 72 months. That makes perfect sense if you just listen to that explanation from the finance manager. So the customer, they need to know that this is not necessarily manipulation. It's just math. So, look at a caller writes in. That doesn't even make any sense. An email comes in. I had a customer years ago who declined a prepaid maintenance plan because it added $12 a month to his payment. 12 months later, he spent more than double that on a single service. Tisk, tisk. Glad that caller wrote in. Customers will fight tooth and nail to get $10 off their payment, but then they'll go out and spend and get their triple soy, low cal, no sugar, quadruple macchiato at Starbucks every day for the next 10 years. Go fig. So now I want to talk about extended warranty. I bought an extended warranty. I bought my car, I leased it, and then I wanted to buy out the lease before the lease was up so I can own the car. And in doing so, you're sitting in the finance office, and I bought an extended warranty. And the extended warranty probably cost me like $2,800, something like that. But I also did enough research to know that that particular vehicle I was buying was known to lose its tranny. Can we say tranny? The transmission goes right around 100,000. And I knew I was going to keep it longer than 100,000. And so I bought the extended warranty. And guess what, kids? 101,000. Pew, pew, pew. Dead tranny. South side of Chicago. Sad. Anyhow, cost me $150 out of my pocket. Granted, I paid for the warranty over the years of my monthly payment, and I ended up, paying the full $3,000 over it. But the transmission would have cost me $10,000 if I didn't have the extended warranty, and the car would have been useless. It's like a 3 or 5 year old car, and I want to put a new transmission in and spend 10 G's on that. I don't think the car was even worth like 12 or 15 grand. So you get the story, got it? Okay, that was a real story. A caller didn't write in, a writer didn't call in. Anyhow, so the extended warranty, as many customers call it, the thing I'm definitely not buying today until something breaks. So let me explain a little bit about modern cars. Back in the day, we had roll-up windows, and that switch cost maybe $50. Nowadays, we have cameras and sensors and touchscreens and radar modules and flux capacitors and lane assist systems and adaptive cruise controls. We can go on forever, right? We're basically driving around iPads with iPads. Yeah, whatever. We're basically driving around iPads with wheels. Okay. Another real-world example. A customer bought a luxury SUV and declined the service contract because he never buys warranties. Don't buy anything. When you get in that finance office, don't buy anything. 8 months later, a touchscreen failed, as they do. Repair bill, $4,387.22, roughly. Suddenly, that warranty didn't seem so crazy because it was probably almost half that cost. Now, does every vehicle need a service contract? No. Does every customer need one? No. But consumers should understand the risk that they're accepting. They need to understand what the bumper-to-bumper actually covers. And ironically, it actually doesn't cover the bumper. Think about that. That's bananas. Now, let's talk about gap insurance. Remember I brought up earlier how people don't wake up in the morning and go, God, I really wish someone would sell me gap insurance today. If there's one product consumers dismiss the fastest and regret it the most, it's Gap. I'll explain it to you like you're my friend. She is got a full missing my old lady with a cold upside head. That was dumb. All right, let's say you buy a $50,000 SUV and you put down very little money. So you're financing almost all of it. And you finance it for 84 months. Bye-bye, long time. 3 months later, a super smart teen texting while they're driving, probably Snapchatting, and they wanted to introduce your new SUV into a telephone pole. The insurance determines the vehicle's value is worth 44 grand, which is very generous. You just bought it 3 months ago and it only went down 6 grand. I don't think so, did it? 44 grand, but your loan balance is $49,000. You probably just made your second car payment on it. So your loan balance is $49,000. ¿Qué es eso? Ay, Dios mío. What do? Now what? Well, with Gap, you owe 5 grand. Without Gap, you owe 5 grand for a vehicle you no longer own. With Gap, that deficiency may be covered. So Boom. Nothing ruins your week quite like making payments on a vehicle that you already turned into a Cube. Which, by the way, a Nissan Cube, pretty legit. My daughter drove one for a while. It's like a golf cart. It's a good starter car. So, my hot consumer tip, if you're rolling negative equity from your previous vehicle into a deal, if you're putting little to no money down, if you're financing long term, or if you're buying a vehicle with steep depreciation, meaning that it's not going to be as highly valued years later, you absolutely should consider GAP. And it's not very expensive. So let's get into the payment presentation, the classic F&I technique. You roll up the sleeves. And one of the oldest finance office techniques is this. Instead of discussing cost, they discuss monthly impact. Now, if you were paying attention at all in the last episode, I prayed to 6 pound, 7 ounce sweet baby Jesus, not just for my smoking hot wife, but for the love of baby Jesus, don't buy a car on payment. So guess what they do in the F&I office? They focus on payment. So they're not going to sit there and say, hey, Kaniki, this protection package costs $2,000. They'll say, it's only $28 a month more. That sounds way better. Because people buy monthly payments, not total numbers. So you'll most likely never hear a finance manager tell you this thing costs $2,200. They're going to first say it's going to increase your payment by X. They will show you how much it costs. They need to. It's in the contract and all that stuff. But their verbiage to you is going to be about monthly payment increase. So neither number's wrong. You should understand both. You need to ask questions like, what is the total cost? What is my monthly cost? What does it cover? Like bumper to bumper. Does it actually cover the bumpers? And they're going to be like, no, isn't that funny? Someone came up with that phrase. It's bumper to bumper. It's in between the bumpers, basically. And then deductibles. You know, my deductible was so low and I only had to pay like $150 outside of that because they didn't have the part. And so, and then you need to understand what the exclusions, you know, just when you buy a brand new car, you'll be educated. A good finance manager will educate you on everything that it's covered in that warranty, because what that is enabling them to do is explain the warranty you're getting with this. There it is again. Sorry, Mom. And I take a sip. They'll explain all of the things that are covered inside that warranty of this brand new car you're buying, but then they need to explain to you what's not covered. And that's where an extended warranty, the service contracts are huge. Wheel and tire is a great example. That's not covered in almost any package that a dealer offers. The wheel and tire is a separate warranty you're going to buy, which, again, if you bring your car in, you're going to trade it in, and the salesperson's like, oh man, what happened? Did you let your Uncle Stevie Wonder drive your car? Oh, look at those wheels, they're jacked. I know. This is the third episode in a row that I'm using the Stevie Wonder stupid joke. It's fine. I'm going to use the cup joke at pickleball later, so I'm a dad, whatever, that's what we do. But the wheel and tire, they're going to sell you on that, and it's great because you should get it. Your wheels are banged up, so it's highly likely that you're going to need to fix those rims if you're going to trade your car in, or if you pop a tire. I mean, there's so many great things that are covered in that. So if it's right for you, you should get it. And I digress. So make an informed decision, and remember, all of it is negotiable. So negotiate. It's fun. Don't you think it's fun? It's fun. It can be fun. So let me kind of finish up with what a good finance manager does. They say, here's the truth. The best finance managers I've worked with weren't salespeople at all. Actually, the actual best finance manager I've ever worked with was a service advisor, and he moved into finance. Why? Why would that make him a good finance manager? Because he knows everything that goes wrong with that car. So he can look you in the eye and be like, ma'am, sir, Schman, I worked on this car for 15 years. I know that these trainees go out around here. I also know this and I know that, and this is how much you're going to spend on. I can show you the data, but I'm just telling you as a former mechanic or a former service advisor or whatever. A lot of times they're both. Here it is, and guess what? The trust is built. They're like, oh damn, you're right. You have experience with this, and I should do that, and I should purchase the extended warranty or the prepaid maintenance, because then you also can talk about things like, well, you know, the cost of labor is going up, the technician shortage. They can talk about the service department and really get into it with you, and then you can really look at it and make an educated decision of like, oh, okay, you know what, this guy's making a lot of sense because he's telling us his real world experience. So they are educators. Their customers trust them. The good ones, they explain the risks, they answer questions, they solve problems, and because customers trust them, they sold a lot more products. That makes a good F&I manager. So the finance office isn't really about warranties, gap, maintenance plans, or interest rates. It's about risk. It's, you know, trying to take this risk and transferring it to some other entity like an insurance company. Every product in the office is designed to transfer that risk to somebody else. So the question isn't whether the products are they good or bad. The question is whether you're risking what are you risking? Is it worth the cost? So, and that's really the conversation most customers never have. That's all I got. I didn't even finish half my pretend beer. So, I'm Denyn Pysz. There's another episode of the Car Business Show. I'll see you next week. Cheers.